All right, let's talk Mountain Equipment Co-op. Thousands have signed this petition to save the Canadian company from being sold to the U.S. investment firm Kingswood Capital. The company, I can tell you, just in my inbox, I woke up at 2 a.m. this morning, said this, and this is Dear Valued Member, and of course their customers are members. It's a co-op, and that's what all the concern is. We recognize this has been an unsettling week for members. They go on to say, facing a stark choice, we chose to preserve employment opportunities, a larger store presence, and a commitment to MEC's ethos rather than fold up the MEC tent for good. But essentially with the sale, it would no longer be a co-op. It would be an outdoor store up there competing with so many other outdoor stores. Your take on all of this, Danielle?
So I think there's a couple of really important themes going on here. One is the credit bubble and consumer spending that happened over the decade preceding this, which took a lot of companies in the retail space to expand really rapidly and roll out a lot of new stores, bricks and mortar, all that sort of thing, and add new lines, frankly, outside of their specialty, like urban wear and various things that were questionable relative to the base brand. I think that that's a problem. They took on a lot of debt to do that, and now we're at the end of that consumer credit bubble. So now we're seeing less spending, and then we get the hit of the pandemic, which is impacting that even greater. We're, in this very, very difficult time for consumers. So I think all those trends were going the wrong way for most retailers up until now, and this has really brought this to a head. I wish I saw more upside when private equity companies took over companies in the past. I mean, whether it's, Toys R Us or Payless Shoes or Sears, I mean, I actually can't even think of an example where private equity took over a company and it ended up doing well. What they tend to do is put in as little money as possible, pile in the debt, sell off the good assets, and the employees end up getting laid off anyway. And eventually the company tends to go bankrupt within a few years if they can't sell it back to the stock market, which is always their goal, to get rid of it again within 5 or 7 years. So I don't see this as a very long-term good thing for the brand. Unfortunately, bankruptcy is actually the process that we have had for hundreds of years that cleans out the system, but then lenders and bondholders have to take a hit, and there's usually such resistance to that they go through all these various contortions to try and save businesses in other ways, which ultimately doesn't end up working. So I'm disappointed. I don't think it's a good sign, and I wish we would just get more comfortable with the idea that companies can go bankrupt, you can still salvage brands, and you can maintain jobs.
So far, Kingswood saying that they plan to retain 17 of the 22 MEC stores, and you listed the reasons why the company, the co-op, then now company, essentially, got into trouble, Danielle. But it was a company dealing with outdoor goods in the time of a pandemic when people are getting outdoors a lot, and a company that one of our colleagues pointed out to me this morning, accumulated consumer information because it was a co-op long before others did, at a time when companies are falling over themselves to be able to use that information to attract customers. Sharina, am I missing something in why MEC couldn't make a go of it?
Well, I think MEC is very unique in the sense that it was established as a cooperative. And at its core, that means that it's owned by the members that it is meant to service. So with that, puts in place a unique governance model as to what it can and cannot do. And in many ways, MEC has come out publicly for decades saying that it's very much about environmental stewardship. It's also about being able to enjoy the outdoors, as well as giving their members the benefit of having some form of participation in how the business operates. Well, that being said, business operations don't always coincide with those statement of principles with co-ops. And I think something that's overlying a lot of the concerns associated with this MEC deal is this recognition that many of those members weren't necessarily consulted when the decision was made to ultimately sell the operations rather than look through the restructuring process. And I think that's something that really sticks to the brand that MEC has established. And going to the trends that you mentioned, the last thing that this revamped company wants to do is have its loyal customer base really adhesive to what it stands for and whether or not it can deliver on high quality products, which it has in the past.
Well, and we've seen this with and Danielle, last word to you in terms of the deal that is opposed by those 80,000 who've signed the petition. Is it going ahead? Is the co-op no longer?
I think that the fact is that it wasn't sustainable before the pandemic. They've been losing money for a few years here. I think that it was the overexpansion and the too much debt that was taken on, misreading the tea leaves, so to speak, of the sustainability of the consumption that was going on. So I don't think the status quo is not an option. And if they don't go with this deal, and I think they'll have to proceed with bankruptcy proceedings. But again, I think they're going to do that in the end anyway. I think that this is just stalling the inevitable and allowing private equity to gouge out a bit more money for their owners versus the other stakeholders that are already involved here.